PANW. That is the pick this week. Now, if you take a look at the PANW chart, you got some interesting things going on here. First off, earnings are behind it. So that's good. We're not going to be playing around, messing around with earnings. If you take a look, the last two earnings have been pretty interesting, though. The earnings that were reported on May 31st, obviously a pleasant surprise to the upside, produced a gap opening from 118.5 roughly to about 133.10, about a $15 gap opening. The previous earnings, however, produced another gap opening, this one a bearish one. Stock closed around 152 and opened around 120. About a $32 gap. So what we have here is a real interesting situation. We actually have two gaps to fill, don't we? We never filled the rest of this gap up to 152, but we do have a gap up to around 132. Stock presently trading around 140. But look how tight it's now starting to play on this 140 flat line. It looks like a good line right around 140, and the stock is just clinging to the line. It's a very weird situation for Palo Alto. Palo Alto is still a reasonably volatile stock in the scheme of things, but it's sure as heck not acting like one right now. Take a look at the volatility down here. Volatility's way down. It's down right at lows. Look at the volume drying up. I mean, look at the size of these volume bars, and now look at the size of these volume bars. Volume's drying up. Now, it's not really creating a triangle per se, but in a sense, it's having the triangle effect. The stock is just now really zeroing in on hanging at this 140 line. And what we're waiting on is some type of break. We're either going to break up or we're going to break down. I don't know which one. I don't think the stock knows which one at this point in time. But we definitely should go ahead and be ready to act if the stock moves with commitment, with conviction in either direction. Look how small the movements have been. Tiny. We're either going to get this thing to drop, and if it drops, the first level of support is going to be right here at what's going to be soon the intersection of the 200-day moving average and the 50-day moving average. That's going to be the support level, the first support level. If this whole incident goes into next week, odds are the 50-day moving average is going to have moved up, get above the 200, and at that moment in time, it's going to be more of the 50 being the first support. If they're bunched together and acting as one, your second support level is going to be here, around 125. This flat line here at 125. But I think if we get that type of movement, and we're going to need market help, the market's going to have to guide this thing. This thing is not going to move without the overall market doing something to help it. But if it does get down to 125, odds are it should be under enough momentum at that time to fill the rest of this gap and get down to 120. Hey, that's a big drop. That's a $20 drop. It's not going to happen in one day. That's why it's going to be so important that we go 2 weeks out on this trade from whenever it triggers